Damian, let's start with a deep sell-off that we saw last Friday. The major indices suffered the fourth straight weekly loss on the US-China trade escalations. The question on everyone's mind is this a tipping point that will lead to a recession?
That's a very strong expectation, Tony. A tipping point that leads to a recession. We've had these trade escalations since last year. And throughout that period, earnings have actually been up. Jobless claims in the U.S. continue at multi-decade lows. The consumer's fine. And more importantly, more recently, we've had central banks globally that have, stand primed to support this recovery, either through cutting rates or providing forward guidance. So at this juncture, we do not see evidence, objective evidence, that this could lead to a recession. But the risk is there. The risk is that these things could spiral out of control. Corporations could withdraw future capital investment. They could take proactive measures like reduce hiring. And so the risk is, and what you're seeing in the market and the volatility, is that this uncertainty is actually impacting corporate sentiment. And that's what we have to follow.
Now you talk about risk. Could that risk also impact global growth?
Global growth has been slowing now for 3 quarters in a row. So the last year, when we first started seeing the actual implementation of tariffs, business sentiment was already impacted, and that has continued to feed on itself. So in a lot of countries globally, you're actually seeing negative growth now. That's why you've had their central banks take such proactive steps to be accommodative. My view on trade tariffs is this, is that until we have a resolve and either a benign response or some agreement in place, markets will continue to be volatile, and business spending in terms of capital expenditure and stuff will be put on hold. If we don't have a resolve, this could escalate.
I want to touch a little bit on central banks. So you mentioned how central banks are becoming a bit more aggressive in making sure that the global economy doesn't weaken. And what's been lost in this is the Fed's recent discussions in Jackson Hole. What's your take on that? And do you see them being more aggressive going forward?
Sure, that's a great point, because last week the headlines were dominated by escalation of these trade issues, both first with China and then President Trump's response. But also what would happen last week was that the Federal Reserve Chairman, Powell, was actually at Jackson Hole. And he went out there and he said that downside risks to the economy have actually increased since the last meeting of the FOMC. And he said that the Fed will continue to do what it takes to support this recovery. I think this is almost akin to whether it's the Federal Reserve, whether what's happening at the ECB, central bankers globally are very attuned to this escalating issues stemming from this trade conflict. And it's almost like firefighters. If this wildfire gets out of control, you can expect continued accommodation.
And do you see this volatility going forward?
I think the volatility continues till we have some resolve. And so think about this. If you try trading these trade salvos, it's impossible, because not only do you have to know what the outcome is going to be in a very fluid discussion, you'd also have to get the market reaction correct. And I don't think this is in the best interest for long-term investors. What you should be really focusing on is what's happened with the discount rate. The discount rate's actually, because bonds have correctly repriced higher, yields have moved lower because of risks. This has made the value of cash flows. So think about, corporations whose businesses aren't really tied to the China-US trade relationship. If those businesses continue to generate higher levels of cash flow, those cash flows, because of the collapse in rates, are more valuable. So I think focusing on, high quality companies with underlevered balance sheets, which have rising cash flow streams, this will continue once we have some sort of normalcy in the market. People will look back and say, wow, that's a great time to buy these businesses.
Damian, thank you very much for your time.
Always a pleasure.